The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, Eastern Time, 11 o'clock till noon. And today, the 28th of October, we've got one more session to go. And then the month of October is done. November starts on Tuesday. And that's going to be really important. But you know what? I wanted to show a bunch. I decided just a few moments ago. I have a webinar coming up on Wednesday night. And essentially what it's going to be looking at is, regardless of the election, what are we looking at in the market? What's going to benefit technically at this particular point? What's not going to benefit technically? And then we'll talk about the election itself. But most importantly, I'm going to be doing the longer term outlook. And the question is, will there be higher highs to come regardless of the outcome of the election? And my answer is going to be in a very comprehensive report based on all my methodologies. I'm going to be discussing everything that's important for an hour and a half, Wednesday at 6 p.m. Eastern Time. I'm going to go through things. Look at this. Individual spending is on a tear. Banks are issuing credit cards like it's 2007. Look at that. Look at this. This is the Boston area. Developers are showing new interest in Mass Pike Air Rights project. When do they do this? When the cities involved are so desperate for money because they're overspending by so much, but they're getting a lot of money in, but it's never enough. And they're going to try to get even more money by using air rights. And I have to tell you, if they did a study of the air rights, look at the bridges here from downtown Boston along the Mass Turnpike. In the late afternoon, especially in the wintertime, when you're coming from downtown Boston going west, the light from the sun is so intense that you go through the tunnel and it's black, and then the sun shines, and then it's black because of the bridge, and then the sun shines. And now they want to build even more of these, this zebra crossing. It doesn't make sense in many ways, but it does make sense if you want to use those rights to go higher. And we've got 7 to 9 skyscrapers that are going to be built. I've never yet been in the Boston area when there hasn't been a headline that says, essentially, now we've got the funding for 1,000 new hotel rooms because we want to, and it's always related to the major center, the World Trade Center, whatever we have here in Boston, whatever trade center is, they moved it from one area to the other, and it's always a direct link. And then, whoa. Very soon after that, we go into a recession. I'm watching this really closely. I'm going to be discussing all these factors. Now, let's go to the nitty-gritties. Remember, rectangle formations is my expression. Rectangle formations can last a lot longer than your patience, can last a lot longer than your money if you think that every breakout is a breakout to trade, or every breakdown is a breakout down to trade. It's to do the exact opposite. You go above and you have to go short. You go below and you want to go long. And this is the pattern, and it's this yo-yo pattern. Let me show you a yo-yo pattern. 120-minute chart, perfect example. Yo-yo pattern. This is going back to the middle of September. Here we are, end of October, and you've just been chopping in even a narrower trading range. And even every day, you're doing the opposite. Look, red candle, green candle. It's just incredible how that persists. Here's the daily, and there's the daily. And you're right here in this potential cup, potential arch, the lowercase h that I drew a long time ago, and that's the pattern. So let's run the numbers. Got a lot to do today, and I'll go through it systematically. Let's get rid of this. Nice single leg A up bounce. Has at 21.33, has 21.36, very strong resistance, and 21.28 will be the support to monitor over the period of the day. Let's just put this 120-minute chart away. Show you the monthly chart of the E-mini is still looking great. The weekly chart has made that H pattern is holding steady, hasn't broken down below 2100, hasn't broken up above 2172. And the daily is just chugging along in this up, down, yo-yo pattern. So now we go. The Dow, INDU, the Dow is up 60 at 18,230. Let's see, MACD is quite good. Stochastic's rallying. It's at 54%. It's not great. It's rallying, though. Unbalanced volume suggesting that this choppiness can continue for a while longer. And you're right in the Chapman wave inside track repellent zone. So we're going to see how that's dealt with. And they can take you to 18,262. Above that is very positive. 18,000, going to the 18,300s at any point in the next couple of days would be very positive. I think we just stuck here. So that's the Dow. Those are the parameters to look at. Let's go to the S&P, SPX.X. S&P is up only 5.72. It's up 0.27. Dow, the 30 stocks are up 0.33. I like it when the 500 are stronger than the 30 Dow stocks. And what we've got the same arch formation, not nearly as strong as the Dow, and you can see it in the weekly chart is weaker than the Dow's, and the MACD and stochastic, like the Dow, in the weekly chart on the S&P is actually very negative. Monthly is still very positive. So parameters to watch, we're at 2138. A break over 2157 will be very positive, and a break under 21, the low of today's 2127. A break under 2127 would be negative. Let's go to the QQQ series because it was hit with the Amazon pulling back. It's only up 5 cents. I should say, oh, look, it's up 5 cents. That's good. 117.89, but it's a possibility. This is really a peak E in the daily chart of the QQQ series and a leg F in the weekly. This is going to be something to watch really closely over the next 5 to 7 sessions going into the election. So the parameters to watch are the NASDAQ Power Shares QQQ Trust Series trading at 117.90. It really needs to go above 119. 119 to show that it's got the kind of strength that has recycled the weekly chart, because if at any point, if it takes out the low that was made right there in the 13th of 115.94, let's go step by step. 117.20 would be lousy action. 116.80 would confirm that, and then you'd be going down. So we're going to watch this real closely. So far, it's holding up okay. Let's go IWM, and then we want to go to those other mediums. Yeah, IWM, the Russell 2000, trying to find some support here at 118.71. The 200-period moving average, 117.61 is key support. 120.16 is the 9-period moving average. This is not good. The weekly chart is really not good. Let's quickly go to gold. Gold is right now up $3 at 12.72, just holding very steady in this range after a very ugly candle 4 weeks ago. I just think this is going to be another arch formation as gold is just attempting to form some kind of a base. It's all about the dollar, and the dollar right now is down a little bit. It's down 27 cents at 98.62. Having made peak D in the daily, weekly is in a leg D to the upside. I still think that, and I'll talk about this in great detail on Wednesday night, talking about the monthly chart of the dollar, which looks like it wants to go to 100.52, which is start leg D. Let's just finish up here. We're going to go to crude oil and bonds. Crude oil right now is trading down 20 cents at 49.53. It's just kind of stuck. It's trying to sit here on the 200-period exponential moving average. Weekly chart says it's holding okay, but don't break 48 support at 49.54. And if it does take out 50.35 on the upside, that'll be a good reaction to the upside. And we'll talk about the TLT. TLT is down 130.46, and I forgot to show this chart here in the 10-minute chart. I'll be back. We'll talk about that, and then we'll go through some things in a Chapman Wave study. Friday, Technical Friday. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So I had a number of questions which I'd like to deal with right now, being Technical Friday. So let me just get them right away before we get any calls. So the TLT is pulling back, and that goes to the heart of the interest rates. And you remember I've been talking about this for a while. This is the South African, this is the Dow Jones South African Stock Market Index. We didn't need that. Where is, oh, there it is, right there. Here's my interest rate chart. This is leg D continuing up 16 cents in the yields, and the 30-year is up, the 10-year is up, the 5-year is up, and you can see there are a bunch of things that I could do right now to say that we're at a very critical point in interest rates. And look at this. The reason is, you see that trend line? See that trend line? See that trend line right there? That's the 10-year, the 30-year, 10-year, 30-year, 10-year, and 5. 30 is white. The brownie goldy color is 10, and the cyan light blue is the 5-year. It's running sharply. If the 30-year takes out 26.90, it's a moving target. This is a weekly chart. First of all, it breaks the uptrend resistance, that dashed line right there. I'll make it red just for now. Pink there. And this green line is the resistance level that's been a fantastic resistance level for a very long time, since the high back in October, right at the end of 2014. And this means that we're breaking out, and that's going to say rates are actually going to go higher. Maybe the Fed doesn't have to do anything because it's already done. Okay, so now let's do this. So that's the rate. And because of it, you're seeing a number of factors that are involved. Let me go to this. Question by question. So the first is right here. Bob asks, could I look at Amazon, Google, and the wave counts, etc.? So about 2 weekends ago, I think it was, I started showing the Amazon chart. I showed that actually it was way back. It was October the 6th, so it was maybe 3 weekends ago. I showed that there was a really good chance that we've made a peak F in the Chapman wave in the Amazon chart, daily chart. I'd also done a study using my Chapman wave. This is not Elliott wave. This is Chapman wave technique, saying that there's a really good chance that we've gone to Chapman wave 5, which implies a deeper correction, and that we've got to be real careful. But I didn't want to short it because we had a particular stock in mind that was about to give a sell signal. I wanted to devote more time and energy to that because it was way cheaper than the $847 Amazon stock. I also showed that in the weekly chart there was a peak D, second peak D, but also I had the Chapman Wave 5 concluding this particular move in Amazon, especially if you looked at the stochastic and the MACD positioning and the relative strength. But what was most important is that the monthly chart had given a leg F. I couldn't really at this point count it any other way for a couple of reasons, but I was keeping it as an F. And I said, based on this pattern, there's a chance you could make a G, but everything about it says that if earnings are coming out soon, it might not be very good. And it doesn't mean to say that it's going to crash, because Amazon, I'm going to get to this in a moment, is what I'm going to talk about in my webinar. The relationship of Amazon to, say, the retail index, the RTH, or the XRT, which is very different as Groupon and others, minor stocks. But in the most important context is that Amazon is still a dynamic stock. It is the dinosaur, not a dinosaur, it's dinosaur in size. It is the giant, but not a dinosaur in that it is actually the innovator. Every single medium wants to copy what Amazon's doing in so many areas. So this is your benchmark. So I'm looking at this. I had a question today. Someone said to me, so what, are you thinking that Amazon's going to be a buy? I said, I would not be surprised if I don't get a sell signal in the monthly chart. But instead, with the seasonal buying coming up, people go to Amazon. But they might be having too much in the way of expenses. And we're going to try to do an analysis of this based on Amazon. So Amazon sell mode in the daily already for a while. Today at 4 o'clock, when the market closes, I'm pretty sure I'm going to have to say sell mode. This plus sign is going to have to go to a down arrow in the daily, in the weekly. But that doesn't mean to say that it's going to, this is just a designation. It says if you've reached a certain level below the stochastic, the MACD's failing, the stochastic's failing, then there's a really good chance that you're going to have to look at these particular markets in the context of time frames. And if you recall, for those subscribers that were on board with what I was looking at, Amazon right here had made a peak F, 2 dojis right there, silent dojis at the top in the 120-minute chart. So we had every reason to think that this was a short sale and a sell signal, but at that price, is tying up 800 something bucks. Is just, it wasn't worth it. So that's that. And then Google, I'm going to Google. I call it Google. I'm not interested in this alphabet stuff. Made a peak F top in the daily. Nice candle today. If it breaks out above the high that was made, that was premature. I should not have put the down arrow. That should have been a plus sign. I have to wait for the MACD to cross before I can do that. That was, I'm sorry, it's just a habit. I see an F, I put a down arrow. But we'll see if it starts to fail next week. But most importantly, I've got a leg F/C in the weekly chart of Google, and it looks great. And the monthly chart looks great. So I don't, this is not a short under any circumstances. And Google's still one of those stocks that is part of a major portfolio for the very long term if you're looking like a type grandkids type portfolio. Question about Facebook. Yeah, Facebook's in the same category. I think it's becoming a little bit more difficult because Facebook's making, I got to call this a leg C in the weekly chart. Have no choice. Do I have a choice? No, I have no choice. Leg C in the weekly, that's a positive. Leg E in the monthly, and the daily is just chopping around. I can call it an A, B, maybe C. It will still go to D. It's still looking good. So Facebook is still one of the great stocks and a great company. So far, that's what it's saying. So yes. Now, my question was, there's another question. How did you actually pick the different stocks that you mentioned in your newsletter? For those of people just joining my newsletter, how did you do the analysis of stocks like EW, which must have a good, it's having a bit of a bounce today, which got smashed. We've been short from 121.41, all-time high is 121.75. What was the analysis? Well, it was peak F in the daily. You remember I sang the song, Chapman Wave song, peak F. That's where it flashes that's where a big bell rings so loud it can make you deaf, and all you got to do is raise your stops or whatever it is. But peak F is where you got to watch out. Peak E in the weekly chart. Its technicals were not anywhere close to as good as it was back in April, May. when it was going to that last peak F. And I said that Edwards Lifesciences has a pattern that often can go to a G if the MACD remains strong all the way through to F, and it can go to G, and that G would be a down arrow if it plunged. Well, it plunged. It went 23%, a very quick move, and hit 121 was the high, 91 was the low, and now it's trading at 95s. This is a done deal for at least a little while. No, more than a little while. And Edwards Lifesciences, EW at 95, up 3. That's the way we're looking at. I also spoke about Athena. It's been on our shortlist for ages. It had that major top back in 2014. Spoke about Cintas, which is telling us about some kind of a mini recession going on in certain areas. Look at the stock. Look at that. Hat trick top. PMDs. I'll be back. Basil Chapman. Dow is up 61. S&P is up 550. We'll talk about these and why in a moment, and we'll talk about the relationship to my webinar.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, folks, this is the 2-minute chart of the E-mini. Made a peak D right there. What do we look for? We look for, and this is an overlapping wave. We went to, from the low that was made right here, at 936 at 21.75 on the E-mini, it went to peak A and B. See how the stochastic and MACD rallied nicely? Then it gave a huge pullback, and then it started another move. But that move had its own gray. It's under the previous peak, gray A and a gray B. And that says that if there's a breakout, a sharp breakout, it's a Chapman wave cup and ladle overlapping wave that should go to a C and a D. Boom. doubles in price and goes to a C and a D, makes a top at 2134.75, and now it's consolidating. That's the 2-minute chart. The 10-minute chart has a question. Would I put a trade on? I put a trade on based on the 2-minute chart, but there's still residual strength here. I'm not sure I want to get in the way of it. If you want to put in a short right here, 2132, you better have a stop just at 25 cents above 2134.75. I would not. I'd just let this play out. There seems to be waves of buying that are coming in, and the VIX index has dropped under 15 at 14.91. So just let this play out a little bit. You might have missed a nice peak F here. I think there's an alternate count, and I've got the left side, right side price time match saying that by about 12 to 12.10, there should be an attempt. If it holds well, there should be an attempt here, 21.3650. Most important, under 21.2950, it's a new ball game. It's given back, and that might be the high of the day. So just treat this as the residual strength is being maintained. Now, question. So within the context, I was asked about Orly. I think, was that a question about Orly? Yeah, Orly, which I've been talking about for ages, as being in with a chance of a hat-trick top as the auto repairs, the parts companies start to see a deterioration in their profits. Why? Because the new cars are being, 17 million cars, fewer people are repairing. And this is the same thing, peak F in the weekly, AZO, this is AZO, not Orly, this is AutoZone car truck parts. And there was a peak G in the double top peak G in the AZO daily chart way back there in July, around about 820, and it's pulled back sharply to the 720s. Now it's at 733, so that's kind of done. Orly was the other one, ARLORLY. We've had this as a short. I just forgot to look to see about the earnings. If I knew that there were earnings, we absolutely would have taken a short position or maybe even a put position. It had a sharp smack to the downside. It went, it's been up in the 270s. Yesterday it hit 251.62, having a really nice rebound today. But I think that this is like AZO. I think it's kind of done. Can go sideways. It'll be lower highs and lower lows. That's what I'm anticipating. Okay. So Athena Healthcare, this is another one. We have shorted before. We weren't short. We had nice profit once before back in 2014 and just haven't been in it. Been looking and talking about it, but I never actually got into it. It's had a huge move to the downside just lately from the 130s down to 100. Now it's bouncing a little bit at 104.09. And that's the thing about this rotational correction. What I've been talking about in my webinar is what's the relation, what are we looking at to the RTH, which is the retail index, which gapped down today, huge because of Amazon. What's going on? I mean, if we're looking at a major top in the retail, in the RTH, if this is one, and the monthly will tell us very soon, this is something that's more serious, and we're going to have to be studying this really closely, and that's what we're doing in my webinar. We were going to short right at the top, and I said, it's so hard to get the stock. Some people were able to get the stock, some people not. I said, we'll deal with this like GE. We'll treat it as a key indicator rather than trading in and out, in and out. So this is here at 81.70 on the 15th of August, also made its top. And look at this, the H pattern, failure pattern. What a nice pattern that is. So I'm going to be watching this one real closely. So the question now is about Merck. Merck is pulling back, is down $1.92 at 59.37. Made a peak F in the weekly, made a leg D in the daily, and I think Merck is in that area that says just be real careful, because this also, of course, depends a lot on the elections, but I wasn't sure at all what the count would be. It's a really strange count. This is one of those. I'm not going to spend time on it now, 63.47, 63.48. Oh, I am going to spend time on it. It did that. I hadn't looked at it for for about 2 weeks. And now look at this. There's you can call that A, you can call that B, you can call that C, you can call that D, and there it made its peak D, and now it's plummeting. Merck, be careful of Merck. I think Merck it's going to digest these huge gains that it's made, and if it takes out 58, the 9-period moving average support in the monthly chart, that's not going to be very good. Next question was Pfizer. We'll go to Pfizer, and then we'll go to the XLV. Pfizer, I don't even want to look at it. It's in the category of going lower lows and lower highs. it's at 32.07. I think it's going to test the 9-period moving average in the week, the 200-period moving average in the weekly, which is at 30.78. So my target is between 31 and 30. That's going to be the real test. And then XLV, which is the healthcare ETF, XLV. Of course, we've got plenty of those, but XLV we'll deal with. There's that Eiffel Tower. XLV, we were short this once. I think we got out with a little bit of a profit or a little bit of a loss. And then it went off my list for some reason. I'm not sure even why it went off my list. But look at this. It's a huge gift back. It took a lot of time to do that, to test the low of the 27th of June, where the low was 68.09. And today the low was 67.71. It's taken it out. So my rule of the arch formation, and I'm going to go through that right now, other than to say it better get back over the 9-period moving average of 69.31, or the XLV is really in serious trouble. This candle, this Chapman wave, huge, one of the biggest I've ever seen. Roman candle that goes back to the low of August of 2015. Remember that rogue wave to the downside? That was the flash crash. Well, if this starts to trade for 1 week and close within 1 week under 65.72, it could go all the way back down again. Oh man! So I would not be playing this on the long side. Okay, I hope that helped you there, Sarah. Let's go to Julie. Julie, XOM. XOM, I think, came out with earnings today, if I remember correctly. Well, today was the day. What did it do? It's down 78 cents. Oh, it's come back very nicely. It closed yesterday at ExxonMobil closed at 86.80. This morning it dropped to 84.53 and it's trading down 86.11, only down 81, but it's still that arch formation in the daily, arch formation in the weekly, another arch formation in the monthly. If you're looking at this as a dividend stock, be careful with some dividend stocks. Actually, this is holding quite well just at the moment. But I'd say be careful, because if you're prepared to lose 3%, that's okay, because you're going to make it up on the dividend. But if this thing's going to break 82 and go even lower, what's the point of a 4%, a 4-point decline in your capital when your tax-paying dividend is 4.2, whatever it is? I know it's somewhere around there. So be real careful with that. Now, the other thing I want to look at, if you don't mind, and CVX, which is Chevron, is in fact up. Oh, look at that. Not the exact opposite. It's very strong. This was a stronger chart in the weekly. There's that H pattern that can go to a cup. I'd already drawn this in with the left side. Why did I forget about this? This is a nice looking chart. So there you are. Chevron is a better dividend stock right now than Exxon. Let's put it that way. All right, so I've got a bunch of these things going on, and I'm going to do this. We've got a break coming up, and then we've got 2 segments to go. So if that's the case, what I'm going to do is I'm going to talk more about my webinar, because I think it's a very important moment for the webinar. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, a question about these numbers. This is in the Chapman Wave methodology. This is my Chapman Wave projections of support and resistance for 21.31.68. Of course, this doesn't work in 25-cent increments. It's 21.31.50 is the key support here in the 5-minute chart, and 21.31 is the next one. And if it takes it out, then this candle here makes the downside vulnerable. There's a real tussle going on between some buyers and sellers within a small range. So CVX acted very well. Then I had a question left over. Dan wanted to know about the USO. Yeah, I'm kind of concerned. I think the oil is going to pull back a little bit more, and that's going to test the strength of the weekly chart. So just at this particular point at 11.10, down 11 cents, my thinking is it has to crack 11.33 on the upside. Otherwise, it's going to try to test the $11 level. And if it goes under that, that's just not a good sign for crude oil, just on the shorter term. The weekly chart is still holding okay. It's not great. I don't see any strength right now. I think we're getting close to seeing strength, but a lot depends on, I'll just go quickly back to the dollar. The dollar is actually holding as a high-level consolidation for 3 bars. It made a leg D, then a peak D, and it's holding above 98.48, the 9-period moving average support. That's going to be really important. And if it takes that out on Monday, that takes out 99.12, the high, that'll start a leg E/B. That's going to be very important. Okay, so quick question then on that. Oh, another question was, so what was your thinking when you shorted Alta? I forgot about that. Alta Salon. Well, one of the things was that I did the same study, that Chapman Wave technique. This is not Elliott Wave. It breaks too many rules of Elliott Wave. And I did the study from the low that was made back on the week of the 28th of August at 120.38. And then I did Chapman Wave alphabet count going to a peak F right there at 278.35. And then I also did the Elliott Wave variation. It's really a Chapman Wave. I'm just trying to give someone who might be listening a reference of why I call it a CW5, Chapman Wave 5, is because the rules, many of the time, the rules are completely broken, Elliott Wave rules. It's just something I've worked on for about a year and a half. I'm using it much more. I'm using it more in trading as well. And this is a 5. And this is a Alta Salon. And remember, we were shorting it at 270.11. And it broke, and it went all the way to 234. We were doing fantastically. I said at that point, if any swing traders wanted to get out, take some off, but we're going to hold it. And we held it, and there was this crazy day. I don't know what happened. There was this move up, huge move up. It went from about 237 to 266.74 in one day. So it took us out at 255. Nice profit, can't complain. And then I tried to short again, missed it, and then I didn't do anything, and then it plummeted from 268.78 to today's low, yesterday and today down in the 239s. This tells me it's done for now. And that's my big thing about what's coming up in the next phase. We've got so many stocks that have been, look at this monthly chart, look at the weekly chart. It has been stupendous. Fund managers rewarded every hour of the day just to buy it on every single dip. And now look what happens. Suddenly it turns around. I think there's a problem, but I also think that Alta is going to hold much better than some of those stocks, and that it could be a buy once again. I'm not sure this is a hat-trick top that I don't ever want to get back in on the long side. I never did. That I would not want to at least attempt to get back in. I want to see what happens if it can pull back into the 220s. That's where I'll say, okay, now maybe there's a really strong bounce. It's a great company, so they've done everything right up until now. So that was that question there. So in the webinar that we're going to be doing, I'm going to be talking about, first of all, I've spoken, as long as I've been at TFNN, I've spoken about the VIX and how I use the volatility index. Others have tried to emulate some of the techniques, and they have other ways of looking at it. That's fine. That's the way it has to be in any robust technique. That's why listening to Larry's webinar the other day, and he talked about 135, which I've seen him do, but I never really totally focused on it. And all of a sudden I'm saying, hey, the 135 is exactly like my left side. Not exactly. It has a tremendous amount of similarity with my left side, right side price time match, except I'm looking horizontally. But I also many times over the years have looked at it in a diagonal way, which is really what he does. So it's fabulous to have a system that you've used, to spend your own time, made it an original concept, and then all of a sudden you find out it's been in use in a different way, but it makes it a robust. A robust system accepts other robust systems. Remember that. So at the end of the day, if the VIX index, which is trading at 14.91, closes towards the low of the day in the 1470s, let's say, and even goes even lower than that, and the market rallies strongly, that'll be a sign that the VIX index is, the buying of the VIX index has been premature. But if there's a rally, and the rally takes the VIX towards the upper end, it's at 1493 right now, but it goes, the high is 1591. If it goes towards there, even takes it out, the market suddenly pulls back towards the end of the day, nervousness over the weekend, and the VIX rallies, it's going to be the first time in a long time that the VIX is saying, I'm starting to build a higher base of support. Look at this trend line in the weekly. It's the first time you can actually do that. Look at that. That's a nice trend line. And that's saying higher lows, not yet higher highs, but more importantly, it's higher lows. And that's going to be saying buying of puts is prevalent. And that's going to be very important. Okay. So that's the VIX index, and I'll talk about a lot in the webinar. I'll give you, like I did before in every one of my webinars, I give you the levels to be looking at for your own personal use. Okay. Now, I wanted to talk about, within the context, let me just see if I can get to this now. Did I put it in here? There it is. Okay. Within the context of a major, this is the coda phase. I haven't yet called the webinar the final coda. We're not there. We're in the middle of the coda. But at the same time, I'm really looking at this and I'm saying, there are aspects, if I can just get to it right here. I want to get to this again. There are aspects within the context of markets, and this is what I'm going to be talking about, where cities and town governments, the states start to look at breaking their rules that they've had for a number of reasons. They allow buildings to go higher if they'll set back a little bit. They allow certain criteria that would be absolutely regimented by strict architectural rules. They'll start to ameliorate, they'll start to change those and compromise. And they do it, they say they're doing it for the people because the people want more housing, the people want more garden, the people want, but in fact, really, what it really is, it's a form of, at a particular point of time, the only way they can see their way out of expenditures, and believe me, like the MBTA system, the transportation, the rail system here, it is abominable. I mean, every week you read about mismanagement, blah, 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 but it's disgraceful. So this is a way of getting money. And there it is. You give away your air rights. The last time they did major air right thing was decades ago. And this is what you start to see. This is what the Prudential was. So we're looking at this as a potential moneymaker, but at the same time, it is, for me, a potential topping phase. And that's what I'm going to be talking about. How can I call it a topping phase when the market's doing so well and I still expect the market to go even higher? Because it is a phase. I'm not doing it in P, D, or E, or F at this particular time. I'm talking about the bull market is still extant. It is starting to wear thin. I'll be back. Basil Chapman, Dow's at 56, S&P's up 4, and we'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, great programming. Stay tuned for your swim lessons. Okay, last segment, let's do this. See the VIX index on the 10-minute chart. What do we always look for? The chart wave, D's, E's, and F's. And what do? We go from this low right here at 8 o'clock, around about the 13, what was it, 13, yeah, right there. Right at the 1360 level, starts A, pulls back, doesn't break the low, so it continues strong leg B. And then you could even call this an inside AB, so an overlapping wave that should go to a D, and it goes to a C, and then it goes to the D. D, the MACD and the two moving averages here are still very strong. And what does it do? It goes to E, and then it goes to an F. Then the VIX index plummets from the 1591 level down to the 1470. And now here's a very important moment. Why? Because within this context, what we're looking at is we're looking at this is either an arch formation. So far, there's no real strength in the VIX to rally. That means that the market can hold up a little longer. And if you put it into the context, remember what I was talking about in the E-mini? Oops, where did we go? There it is. So I have not yet said it's an F or a B, because that's what you got to do. You got to be, sometimes you got an alternate count. Treat the alternate count with respect. And now I can even draw in the potential for a cup formation. And if it breaks the low of this cup formation, then it's all over. It's not going to do it. And I'll even draw a little trend line right there. So these are things I was asked if I would do some kind of a webinar showing some of these techniques in a webinar. Yeah, I'm planning on doing that. But first, we've got to get this this webinar out the way, the one on Wednesday night, because I'm going to be discussing so many important things. The dollar, currencies. I was asked if I'd have a quick look at the currencies right now, EUR, USD. Remember, the patterns don't fail. They continue to repeat. And we're looking at that big arch formation and the H that goes to lowercase h that goes to an M pattern in the euro-dollar currency pair. Doesn't look good. There's a little bounce here, but is it more than a bounce? Well, we won't know. At 1.09, if, in fact, it has to break, it really has to break above 1.1038, the high of the 20th of October, to get some real characterization into the turnaround to the upside. And this point is just a bounce. And that suggests that the dollar, how it holds, is going to be really important, and it's holding quite well. 98.48 is some kind of a support. I would say break under 98 suddenly says, hey, maybe now gold can have a little bit more of a bounce. Gold is just holding steady. That's all it's doing. So let's treat this with great respect. We've got all these different patterns that we're looking at. We're looking at also within the context of my webinar, I want to be talking about the autos and what's going on in the automobile. You know, Ford, what is it? I mean, just look at this, trying to rally. It just keeps failing. General Motors keeps failing. I want to talk about that as well for subscribers. Are we going to try to get back into the autos at some point, or are we just going to stay away? So in the meantime, back at the ranch, you're going to have a great rest of the day with all these different hosts. But my focus will be this weekend. I'll be sending out charts coming up Saturday morning. I'm sending out charts that not only work on what we're looking at in the Dow, but it's going to cover the different indices. I'm going to prepare you for Wednesday night. So go to the front page of TFNN, check it out. This is the webinar that's coming up right there. Basil Chapman opening call subscriber event live with Basil Chapman. After the election, are the markets still a buy? And which sectors will work? Hosted by Basil Chapman, Wednesday, November the 2nd, 6 o'clock to 7:30. Now, what's really important about this whole thing is that timing-wise, could we not, just before the election, we want to be prepared. We want to be prepared for the fact that we know on the one side you've got someone who's raiding against the banks, and yet the XLF is doing quite nicely. You've got someone who's railed against the healthcare system, and yet there's a real mixed market there, and they're failing. What's going to happen if the opposing person gets in? That person, there's an undecided thing here that says, what exactly is going to be favored? What about the skyrocketing aerospace defense area? Will they continue to rally? Oh man, we're going to cover a lot. So thanks so much for being here. I appreciate it as always. And any questions you have for the webinar, send them to me at basilchapman@tfnn.com. I'll be back Monday. Have a great weekend. IBB, another thing that's going down. Oh man, what an interesting market.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.